Hi friends, this is Rahul Jain, and in today's video we are going to discuss one of the most crucial questions that many people don't ask themselves, which is, should they adopt a DIY, do-it-yourself investing approach, or should they hire a financial advisor to manage their portfolio? The answer to this question may be very different for you versus me versus your friend or my friend. Why? There are three key reasons for this. Number one, a financial advisor is most suited for those people who lack temperament and expertise in investing. For example, a stock that is the talk of the town with good fundamentals may not be suitable for you because of your low risk appetite. And this is where a financial advisor can mentor you to safeguard against a risk that you can't afford to take, but others may be able to afford to take. On the contrary, let's say if the market falls by 15%, and your equity portfolio also goes down, it's in these times a financial advisor can help you avoid making rash decisions like selling the entire portfolio and exiting the stock market completely. With years of experience, financial advisors can keep your investing focused towards a set of goals and may help you overcome emotions such as fear, anxiety, euphoria, etc. at the right time. At the same time, if you have been managing your portfolio for a number of years and are able to spend sufficient time reviewing your investments from time to time and have adequate expertise and understanding of investments, you may not really need a financial advisor, as it will cost you money, which may reduce your overall returns. Number two, the second reason where a financial advisor becomes crucial in your financial planning is when your size of portfolio becomes sufficiently large, needing careful execution and de-risking. Example, there are portfolio management services, PMS professionals, who manage their clients' wealth. But for subscribing to a PMS, you need to invest at least rupees 50 lakhs worth of assets. A financial advisor can bring years of experience across a diverse set of assets that may be suitable for your personal needs. Portfolio allocation across equities, debt, gold, and fixed income instruments, etc. could be very different from person to person, and when your portfolio size increases, a financial advisor can help you make the right allocation across the assets. Some people do not have expertise in a broad set of financial instruments and therefore need a holistic financial plan. If you think that you don't really understand a broad set of investment assets, a financial advisor may help you manage your finances better. Of course, it comes with cost, and more than cost, one must be able to find a competent and trustworthy financial advisor. Number three, the third reason a financial advisor is much needed when an individual does not have time to plan her investments and monitor them. Financial markets move rapidly. Markets go through bull and bear cycles. If you don't have time, the lack of periodic portfolio rebalance may be detrimental. A financial advisor can assess market conditions and can make suggestions for you to make decisions based on your individual financial needs. Whether you need a financial advisor or whether you should DIY really depends on your individual needs and circumstances. In order to effectively manage your finances with or without a financial advisor, you must still learn the basics of investments so that you're making informed financial decisions. With that thought, I'll see you in my next video.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.